some new faces. For those of you who don't know me, my name is Jack. I'm Jack Lee. Dr. Gary asked me to present some of the stock market stuff about 2 months ago, so I've been doing that for the last 5 or 6 weeks already. So since there are some new faces, all of you got the handouts, right? Okay. I put down a lot of information on the handout, so I may not go into the handout that much because a lot of this stuff you can read. So a lot of it you can read. So I may just touch on a little bit here. I want to go into the psychology aspect of trading. Okay.
What handout do you have?
This one's very
Advanced topic delta neutral trading.
Yeah.
Do you have that?
That one? Yeah.
Yes. Yeah. Okay. Everyone's got that? Okay. I know some of you have been training and some of you have not. So there are many levels of skill set here. And at the very beginning, I have been trying to deal with the beginner, and then there are maybe some advanced folks who have done it for many years already. So I'm trying to take the whole class to the same level. But while I was preparing for this class, then I realized that, perhaps I can use some metaphor to kind of show you guys why some people are struggling, some people enjoy this so much. Remember when you guys first learned how to ride a bike? Okay, many years ago, right? Many years ago. So when you're learning how to ride a bike, probably you have your brothers or your sisters or your parents, holding you on both sides, making sure you don't fall, or you got some training wheels on the back wheel, right? I mean, until you are comfortable enough, you can keep paddling, and then keep it straight, keep it balanced until you can just take off. It requires some skill set, right? Unlike walking, you just walk with your 2 feet, but bicycle, you have to keep it in balance. You have to keep paddling, otherwise you're going to fall off, okay? So many years later, then you start learning how to drive a car. You require different skill set, right? Now, you don't have those pedals where you keep paddling now, but you have a steering wheel. You have your gas pedal, you have your brakes. Unlike the bicycle, you have brake it with your hand, right? I still remember those old-fashioned bikes, you brake it with your feet, you go reverse. How many of you remember that? Huh?
Yeah. How many?
Oh, wow.
Write down.
Okay, so when you're learning how to drive, you have to what? You have to steer it with your steering wheel. You have to step on your gas pedal, go fast. You have to look in your rear wheel mirror. You have to learn those different rules. You got to go through driving schools and all that, right? Will you agree that you need different set of skill set or mindset to learn how to drive? Now, you know how to ride a bike, but that doesn't mean that you can drive a car. You got to go to driver's ed. I remember in high school, they put me in one of those simulators, right? And they got those TVs, you got to learn how to drive and all that. And then after a while, they show us those movies about if you drink and drive, you could end up like this, okay? The cars crash, and all that. So it requires a different skill set. You got to learn how to drive. But what about, how many of you are pilots? Nobody? Flying? Okay, that's good. So no one knows what I'm talking about then. Okay, have you ever sit in a cockpit before? You have?
Yes.
They're very good, very good. Some of you have. Okay, some of you have maybe taken up on an orientation ride and sitting next to the pilot, you're the co-pilot and all that. Would you agree that when you learn how to fly, it's a totally different skill set? I don't know, when they take you up there, did they let you hey, why don't you take the yoke and try a little bit, turn left, turn right, right?
Watch the
If you ever learn how to fly, you will learn that when you are taxiing on the runway, how do you turn? You remember? That yoke in front of you is not your steering wheel. That works when you're up in the air. If you have to turn, you have to push on the right pedal to turn to the right. You push on the left, so the plane will go left while you're taxiing on the runway. What happens when you stop? Both of your feet has to push simultaneously to stop the plane. That's while you're taxiing. Totally different kind of, from driving. What happens when you're up in the air, when you're taking off, when you're climbing and you are at steady at 10,000 feet, whatever, you're flying your little Cessna single engine, propeller engine. When you're up in 10,000 feet, if you want to go fast, what do? There's not a gas pedal down there, there's a throttle. You got to add fuel so that the plane will go fast. Or you push down on the yoke, then it'll gain speed, right? So totally different skill set. Plus you have to be able to communicate with the towers if you're flying close to the city. You gotta look to make sure that those planes around you that you're not hitting and another guy flying. Totally different skill set. Okay? So even though you learn how to drive a car, but when you learn how to fly, will you agree that requires totally different skill set? You have to change your mind. You have to take 6 months of ground school, and then you take then the flight instructors take you on orientation, pop open the engine of the plane, and then you look inside. Wow, a single engine propeller engine is that simple? Do you know a single propeller engine is simpler than a car engine? Really, it's true. It's really true. If you ever have a chance to look inside a plane, it's very simple. Plus, it's very scary too when the first time you land. Landing is very, very risky, very scary if you haven't landed before. So, but you haven't had a chance to fly, I encourage you, this is a good experience. But what I try to get here is that you may be able to learn how to ride a bike, drive a car, and maybe you learn how to fly. All different types of vehicles require different skill set, different mindset. But the question is, you may ask, okay, how does that relate to stock market trading? It involves a lot about stock market trading. I equate that, with like riding a bike. It's like you have to select from a vast array of mutual funds. It doesn't take a whole lot of skill. Yeah, it requires some, whether you're buying a large cap, mid cap, or small cap, or you're buying a bond mutual fund, what have you. But chances are you're buying a basket full. Okay, when you buy a basket full of stuff, chances are you may not get hurt that bad. It's like riding a bike. What happens when you fall down on a bike? You get a scratch. Worse, you get a broken wrist. You fall really bad. But chances are you won't get hurt really bad, unless you fall and then happens to be a car next to you and something happens. But chances are you won't hurt that bad when you're riding a bike. What happens when you're driving a car? When you're driving a car, to me, I equate that to like buying stocks. Okay? When you're buying a stock, if you don't know what you're buying, chances are you can lose a lot of money. What happens when you're involved in a crash? Now, definitely you in a car, you are much safer than in a bike. But you could be going fast too, right? You get on Central Expressway or LBJ, you're going 55, 60 miles an hour, something happened, you could get hurt. Okay? But what about flying? Now, why would people want to fly if it's that risky, right? You could crash and burn and kill. Why would you want to fly then? You can get to your destination faster, right? That's why, people fly. Let's say you have to go to Houston. You have several choices. Either you walk, which is very safe, unless you get into the highway. Okay. Yeah.
Not really safe.
Not really safe, okay. You can ride a bike. take a bus, okay, or you can fly. It depends on how fast you need to get to your destination, correct? You can take the plane and get you there in about an hour. Driving takes you about 4 hours, 4.5 hours, depending on how fast you're driving. Bike, I don't know, a day, 2 days. Walking, a week, 2 weeks, I don't know. So it all depends on how fast you want to get to your destination. Same for trading here. Now some of you may say, why do I want to trade stocks? I'm happy with trading mutual funds. I said, sure, you can balance it out. Sometimes you drive, sometimes you fly. There's nothing wrong with that. It just depends on how fast you need to get to your destination. Okay? For normal adults, okay, if you start working at the age of 25, normally people retire at 65. That's 40 years in between, right? Then if I break 40 years into quarters, like a football game, okay, each quarter is 10 years of your life. Then you need to ask yourself, which quarter of my life am I in right now? Am I in between 55 and 65 right now? You're in the 4th quarter of your game of life. How much money have you saved so far? Have you saved 3/4 of your money right now? If you have not, then you need to select maybe different vehicles. Maybe you need to take up flying. You get to your destination faster. Not all the time. You don't want to invest all your money into like trading, options. I equate flying as like trading options. You have to balance it out. Like I said, sometimes you have to drive, sometimes you have to ride a bike, and sometimes you have to fly. So depending on what you want to do. But the key is, you have to equip yourself with the knowledge so that you can make some really good decision about when you should do what. At least that option is open up to you, right? If you need to get to your destination fast, if you need to get to Houston tomorrow morning, maybe you should fly. Or maybe you say, hey, I still got 4 hours, I can drive down there. Sure, okay. It's up to you, depending on your situation. So that's why, when you learn about different techniques here, about trading mutual fund or trading stocks or trading option, you have to remember it's a different mindset, it's a different skill set, it's a different way of looking at things. It's just like when you are a pilot, when you are flying, you're looking at the sky as 3 dimensions. Not only you have to look at how fast you're going, your velocity, but you also have to look at what? Your altitude. How high are you? Are you losing speed? Keep going down? Driving, you don't have to worry about that because the car is stay on the ground. You don't have to worry about, am I dropping altitude? Okay? So it's a different skill set we are talking about here. So anytime you're learning new stuff, it's okay to get frustrated. You just have to realize that, hey, I'm learning different things here. I'm used to driving. Now, all of a sudden, I'm up at the co-pilot seat. I'm learning how to fly. You just have to learn a different skill set. Am I making sense? Okay. So, having said that, come back to the handout here. I know for the last couple of weeks I've been talking about the stocks, and last week I introduced to the world of options. Okay. Options have some plus and minuses, but there are some ways to use options. And one of the, since this is probably, this will be my last class for the year because I won't be around in December. I'll be going on a retreat. I'll be taking off on another trip. So after this, I'm going to be gone for the month of December. Okay. So, but I just want to introduce this advanced concept to you guys called a delta neutral trading. Okay. So I know several weeks ago I asked one of the team to look up what is the definition of delta. Now, for those of you who are new here, delta is a Greek variables used in the option pricing model. Okay, so delta is what? If you look at your handout here, delta is the variable that tracks the relationship between the change in the price of an underlying stock and the change in the value of the option. Really just know the relationship, really. How much the stock move and how much the option move. If the delta is 1, meaning that when the stock moves by $1, that option is going to move by $1 as well. Why is it important? Because you have to know the delta. If you are not, if you don't, you may be buying the wrong option. And you're wondering why the stocks keep moving up, but my option does not move at all. You have to know that, okay? So what is delta neutral trading? Delta neutral trading is what the professional traders use, okay? Is to offset the position. So a zero delta position by definition is neither long nor short. Now, how many of you know what long or short mean? Talk about long, long, short.
Refresh my memory.
Oh, okay. In the stock market, when people say I'm long on something, meaning that you are buying something. Okay. When people saying I'm shorting this stock, meaning they're selling something. Okay. So in a delta neutral trading, so a zero delta position is neither long or short, meaning that this trader is not selling or buying. It's like staying neutral. Remember what I said about stocks, right? When you buy the stocks, there's 3 directions that stock could move. Remember that? Either it could move down, move sideways, or move up. Normally, when you buy something, you're hoping it will what? Go up, right? When you buy something, you want to go up in value. So when you sell it, you can rip some profit, right? What if you are selling something, you are shorting something like, oh, Jeff is not here tonight. When he's shorting something, meaning that he sells some stock before he owns it, he's hoping to do what? The stock will go even lower, so he can buy it back at a lower price. I know it's kind of opposite to what we have been trained. Normally, you have to buy something first. It goes up, and then you sell it at a higher price to rip the profit, right? But when you are shorting something, you are selling it first. You're selling something you don't have. Really, you're borrowing it from the brokerage. And then you buy it back at a lower price. So when you sell something, you pocket some money. So when the stock falls, you buy it back at a lower price. And then you keep the difference. So that's what shorting a stock means. I know, kind of like, oh God, my mind is hurting right now. Okay? Because we are trained to think of like, you buy it low and you sell something higher. But when you sell it first, and then how do you buy it low? They can do that in stock market. Okay? You can sell something before you own it.
So you sell high.
Yes, and
And
you
buy
buy low. Yes.
It's like buying a home, selling a home, and then you buy it back once it's even cheaper.
Yeah, but in the stock market, you don't have to own the home. In a housing market, you cannot sell a home you don't own. In a stock market, you can do that, right? In stock market, you can do that, but in housing, in home buying, you cannot sell something you don't own. But I have heard a story before. Some guy sold a home of somebody that after the new owner lived in, and then the old owner comes back and says, wait a minute, someone is living in my home. And they realize that somebody somehow convinced the title company, they did something.
That was in the news here.
Yeah, exactly, right?
Yeah.
So it's possible. Now it's like you can sell somebody home. So it's possible now, okay, so it's in the news, right? Yeah. So they're still trying to sort it out, it's like, they couldn't find the person who sold it, so. And
It's
anyway,
called conning.
right, exactly. Okay, so we okay with buying or long and short a stock, right? Buying it first or selling it first, okay? So I want to show an example of a delta neutral trade. That's on page 2. Okay, that's what some people do with the professional traders too, when they take position on both sides. I showed this chart before. On the top half of the page, this is what we call the profit and loss chart. So normally when the traders, when they pick up a position, they always look at a profit and loss chart, what we call risk and reward. You have to know your risk and reward. Remember last time I talked about if you want to treat this as a business, you have to think like a business. You have to think about your risk and reward. How much are you risking and how much are you getting back? And what's the chance of that happening? So that the first one is profit and loss or risk and reward chart. And then the second chart is the probability. What's my probability of this will happen? So I use an example here. How many of you know what BAC is? The ticker symbol BAC. Bank of America. Bank of America, okay, BAC. I just use that as an example because when I was looking at this, I was preparing this Monday, Tuesday, and Bank of America was the very actively traded stock. And it's like, oh, okay, when I look at this, okay, then I said, okay, what if I take up a delta neutral trade? So Bank of America is trading around $17, and if I buy a call and I buy a put, meaning that I open up positions on betting the stock either go up or go down. How many of you remember what a call and a put is? No? Okay, a call option is a trader who's betting on this underlying stock will go up. Okay, so he's buying the rights, not the obligation of owning that stock in some predetermined time. Okay, a put option is the right to sell, not the obligation to sell that stock to somebody. Okay, so call is the rights to buy and put is the rights to sell. Okay. So when I take up this position, I'm buying a call, I'm buying a put, what am I hoping the stock will do?
Move.
What?
Move.
Move, exactly. Thank you, Roger. I expect the stock to move. What if the stock doesn't move?
It's okay.
That's okay?
Just
Well, I
lose.
lose my option money.
Just lose.
I will lose my option money. But I'm hoping the stock will move. So in a volatile stock market, buying a call, buying a put will allow me to reap more profit. I just need the stock to move. I don't care where the stock moves to, either down or up. Remember, the stock can move 3 ways, right? Up, down, or sideways. Each of the direction has 33% chance, right? Would you agree? So when I'm buying a call, I'm buying a put, I'm capturing what? 66% chance. Could I still be wrong? Sure. There's 1/3 chance I could be wrong. But at least I'm increasing my odds, right? Also, you gotta look at the stock chart. It's okay, the stock is really could move, up or down, within the time frame I'm looking at, within the next 30 days. Then I can take up this position, take up the call and take up put.
Do I have to do these separately?
No, you can buy together. Yeah, that's actually the name for this strategy is called straddle.
Okay.
It's like riding horse straddle.
Yeah.
You know? Yeah, it's called straddle. You can take up both positions. And you know, like if you go to trade monsters, which some of you have, you can say trade options, trade option, and then you can open a straddle. Like $17, purchasing 10 contracts of call. In this case, I'm opening 11 contracts of puts. Then I'll explain in the next page why I do that. So that's quite straddle.
But you're putting some money, you're paying for this
Yes.
opportunity?
Yes,
Okay.
yes, yes.
But you pay less than if you really bought it.
Exactly, exactly. In this case, what I'm doing, I'm expecting the stock move. I don't care where it moved to. I don't care if it's move up or move down. I will make money both ways. Okay, what I'm hoping to do, the best case is it moves up and it moves down again. Because when it moves up, my call options go worth more money. Then I can sell my call option. When it moves down, my put option will gain value, then I can sell my put option. That's the best scenario.
Okay.
Okay. Now you may ask, well, Jack, then what is the probability that could happen? About 40%, either way, either or. Then what's my break even? If you look at the right-hand corner of the top chart, what's my break even? If the stock were to drop below 17, what is my break even price of the stock for me to break even?
1773.
Okay,
Which
that's
is
the,
the lowest?
that's when the stock goes up.
Oh, when it goes
Okay.
up, okay.
What if the stock goes down?
The 1633?
Right, right. So if the stock were to go between 1633 and 1773, I'm probably going to lose some money. But I'm hoping the stock will what? Will either rise above 1773 or drop below 1633. Then I could either double my money or triple my money depending on how fast it will get to that price point. Okay, can you all see that? Can you all see that? I know it's kind of small.
I was looking still.
I know it's kind of small.
Is it,
Oh, I see, it's in this.
it's
Yeah.
right here,
No, it's right here.
right here.
Yeah, yeah,
Where you
yeah.
see
That right-hand side box, the left is the price. The middle column is the profit/loss. And then on the right is ROI, the return on investment percentage. So if the stock were to go up to 1862, then I will gain over 200%, 257%. And if the stock were to drop to like 1440, I will make 296%, 286%. Okay, so what I want to do is that I want the stock to move. So the delta neutral trading is what? Is return to the next page, the last page. Remember the delta, what's the delta value, right? The delta value is the change in price, is the relationship change in price of the stock and the change in price of the option. So when you buy different options, it will have a delta value. Now you may ask, oh, where can I look up the delta value? A lot of websites, they have that, okay? But for the time being, don't worry about it. I don't expect you to look it up, where to look, because I don't expect you to trade option. Really, tonight I just want to present that concept to you, to tell you that this is what's possible, okay? So now when I buy this call option, I have, what's my value of this delta? The December 17 call, 535, did you see that? Okay, when I buy the put option, I get a delta of 511 minus 511. Did you see that?
Next page.
It's on the last page. Oh, this page,
Right there.
delta,
Okay.
okay?
Oh, here it is.
So you want the delta to be zero, as close as zero as possible. Why is that? Why is that? Remember what I said about delta neutral trade is that I'm neither long nor short stock. I just hope the stock will move. So when you're able to create a trade to make delta to be zero or as close as zero as possible, you will make money either way. You will make money either the stock goes up or stock goes down. Okay?
So you want the two to be as close together as possible.
Yeah, zero, when I add up those two.
One's a negative, one's a positive, so
Right.
you're looking for both numbers to be pretty much the same, one in a positive and one in a negative, equal to zero.
Right. Right.
Is
Yes.
there an expiration date after you?
Oh, yeah, definitely, definitely. If you look up the table where the delta values are, the call and the put option will expire on the third Friday of December. December 19th or December 20th. So I have 4 weeks for the stock to make a move.
How can it not make a move, up or down in 4 weeks is my question. I mean, it can only go sideways for like an hour, couple hours maybe, before it's gonna go up or down,
Well,
so.
that's why you have to, be looking at the stock when it makes a move. Then you want to, when it reach your profit target, let's say you're not greedy, you're not going for 100% gain, you just say, hey, I'm happy with 25% gain in 1 week.
You get out then.
You get out one
Take
leg.
out the-
Yeah, you get out one leg of your trade.
What you-
Okay, so remember what I said about trading rules many weeks ago? Trading rules, right?
Don't get greedy.
Right, don't get greedy, set your
Afraid.
get your profit target, right? Yeah, this position may be in your favor. You may be gaining like 50%, 75%, so wow, can I get 100%, can I get 150%? Option values can change in an hour. You may be gaining 100% in the first hour and losing a lot of it the next hours, or maybe the next day, let's say. Okay. Now, that's why you can put in stop orders for the options too. Okay, there's different stop orders you can do with options. So you don't, it's not that you have to keep looking at the, the computer or your smartphone and, no, once you put the trade in, you can set your stop order and just go about your business. Okay? Yeah, I'm just telling what the professional traders, that's what they're doing. Okay? So they're taking up on both sides of the trade. So they just want the stock to move, either up or down.
So how can you not win with this, really?
Well,
You can get greedy.
you can get greedy.
Pretty, and just
Okay.
waiting and waiting
Right.
and not getting out. and
Right,
taking a
let's say
profit.
you're hoping the stock makes a big move, either up or upside or downside.
Okay.
You want 100% return of your money instead of like 75%.
I see.
Okay, that's why you have to know in advance what your exit strategy is. Okay? You have to know your exit strategy.
But this is why you like it, because you really are gonna win if you are doing something reasonable.
Right.
You should be able to win with the strategy, right?
Right? Because I have 66% chance of winning versus
Yes.
when you buy a stock, you only got 33% chance of winning. Right? When you buy something, you hope that will go up. Going up is just 1/3 of the chance the stock will move.
But in 30 days, it's never gonna just go sideways.
Well, never say never.
But your chances
Anything could happen.
are like less than a 1% chance of that happening.
Anything could happen.
so-
Anything could happen.
Yeah, but you got 30 days to,
Well, that's
Okay.
why.
Well, it could go up and come down.
Right, exactly.
but it's still moving if it's going up and
No,
coming
but
down.
I mean, if you don't get out, then you're still could lose your money.
Well, also, this is just a straddle strategy, there's other strategies.
Exactly.
In this
Right.
case,
Right.
up or down, either way you win, other strategies, that's not gonna be the case.
Right. You have to, there are different strategies for different markets, okay? There are strategies for what they call the quiet market, meaning that this, I could develop a strategy when the stocks don't move. I just hope the stock don't move, then I make money. Then there are strategies that when the stocks go up, then I make money. There are strategies that when the stock go down, I make money.
Yes.
Okay, so one thing is that you have to make a prediction of where your stock will do. Then goes back to what Dr. Gary is teaching us, right? You have to do your own what? Do your own prediction. Do your own scanning. Okay, so that's how you incorporate your own psychic work with the stock market. If you know by your own scanning this it'll go one way, you may just want to buy a simple call. A simple call is what you're hoping the stock will go up, right? But if you know the stock will go down, you do a what? You buy a put. And when you're not sure and say, oh God, my prediction is going every which way. Okay, you may want to go buy call and put. I just hope it will make a move. Okay? All right. And also on the back, I know some of you asked about some books that I use and all that. I don't want to put too many. There's a couple of books.